Morning, I'm Steve Walker, Client Portfolio Manager on npower's optimisation desk with the market update on Monday the 16th of February. UK markets have opened lower this morning with key drivers including good supply availability, falling seasonal demand, and the market kind of naturally pulling back from significant gains in recent sessions. For more information, please contact the desk at the displayed email address, or please keep watching. Last week's volatility as a result of Dutch gas production cuts has continued into this week. March 15 baseload trading £1.50 a megawatt hour lower, just below the £43 a megawatt hour mark. Initial analysis suggests that a reduction in both CCGT and rough injection demand at the start of summer, which is already priced into the forward curve, should be sufficient to cover any shortfalls in flows through BBL. Dutch production fell to 180 MCM a day last week. This represents a 40 MCM a day cut to previous levels, although this is 8 MCM more than is actually required based on the new production caps. Flows through the pipe were nominated at 30 MCM this morning. Spreads to Holland moved wider last week, but this has since been revised much lower, down to 12 MCM. Rough is currently nominated to withdraw at 12 MCM, although current flow is pegged at 22 MCM. Nominating up to this level should be sufficient to resolve the early short predicted closing line back. Temperature outlooks are largely unchanged over the weekend. There's been a slight dip at the start of the week that's mostly been offset by a nudge higher towards the back end. A period of sustained cooler temperature, given the tighter gas balances we've already outlined, would pose considerable upside risk for March and the balance of Feb. Power side, demand from the CCGT stations is 31 MCM this morning, slightly lower than last week's levels, assisted by good renewable feed-in and higher interconnector imports. Today's forecast for wind generation was revised significantly higher by almost 2 gigawatts at peak. Wind load factors have been revised higher towards the end of this week, around 50%. It's pretty good compared to the 20 to 30 we saw last week. March spark spreads have settled around the £1.50 a megawatt hour mark. Again, that's as a result of increases in the gas forward market and good renewable outlook. That's all for this morning's update. Have a good day.